What's up, guys? Welcome back to DCA. Today, what we're going to do is take a look at Ethereum. We're going to show how this recent move, where Bitcoin has fallen below its 20-week moving average, extending all the way from $69,000 all the way to a low of right around $42,000. We fell below the 20-week moving average. We came all the way down to the 50-week moving average. Typically, this type of move for Bitcoin has serious implications for Ethereum and the altcoin market. Yesterday, we discussed how, in fact, during this move, Ethereum has fallen less percentage wise than Bitcoin has. And this is not typical for this type of scenario. We're going to show how the market is now treating Ethereum perhaps differently than it has in the past. We'll discuss what the implications of this are and where Ethereum may potentially be able to get to if this market cycle is able to extend out throughout 2022. Okay, guys, so this is the Ethereum USD chart. And just to look on the weekly time frame, there's one key thing I think we need to look at right now, okay? And that is the price level where we're sitting at. This has been an important level to Ethereum now, not on one instance, not on two instances, but now three separate instances where we have come down or come up and used this level as either a level of resistance, like we did in May, so the week of 5/3, as well as the week of August 30th. So we have used this level as resistance twice, and now we are using it as a level of support. So now we're in fact on a weekly candle above, sitting right at around $4,020. Okay, so we're just above it, but we want to continue to hold this level as support. In my opinion, I believe that whether Ethereum can hold this level and continue higher, a lot of people like to talk about a lot of things, technical analysis, this and that, price trends, and I do think there's a place for that. But in general, right now, given the global situation, this is simply going to come down to the macroeconomic global picture. Okay. So if the stock market starts to tank, if there's a cascade effect with Evergrande in China, these types of things, if the economic situation in the United States takes a turn for the worst, then it doesn't matter how bullish you are, what various, technical indicators you're looking at, what your levels of support, what your levels of resistance are, at least the local levels. Those don't matter. The market is going to trend down. If the stock market tanks, at the end of the day, your crypto market is going to tank. And I think that's something people need to sort of step back and realize, because you hear a lot of people talking about a lot of things that at the end of the day don't matter if that occurs. If the stock market takes a turn for the worse, your crypto market is going to take a turn for the worse, period. Okay. With that said, the analysis we're doing here will be irrespective of that. We will be discussing it as if the market is continued status quo, where we're sort of in this state of limbo where the market is neither performing terribly nor is it performing incredibly well. We're sort of in this position where we've had this large correction, and now we're waiting to see whether the market is going to be able to turn around or if this general downtrend is going to continue. So we've had a very short level of relief over the last couple of days. We're up. Ethereum is up anyway on the weekly candle, up about 2%, but it's 2%. So, I don't think anyone's getting super excited right now about a $49,000 Bitcoin. So you can see over the last 3 or 4 days, we've sort of bottomed out, and now we're up about $3,000 from there. Okay. So that's great. It's all well and good, but at the end of the day, we're still below the 20-week moving average. Thankfully, if we just actually switch this over to a 50-week, thankfully, we have got back above the 50-week moving average. You do not want to see Bitcoin head significantly below the 50-week moving average. I made a video about this several days ago, maybe a week ago at this point, and I said that, and I showed historically getting below the 50-week moving average is not a good sign. You can do it in the short term. You can have these small wicks below, a few percent below. That's not going to be the end of the world. If you start getting 5 or 10% below the 50-week moving average and the market starts looking negative, it's going to get ugly. It has every time in the past. It's not unique to the crypto market. It extends into the stock market. It extends into, you pick your asset class, it extends to that asset. Getting below the 50-week, you know, extending significantly below it in the setting of general market turbulence, it's going to get ugly. Okay, guys? So that's kind of what we're looking at here. We're back above the 50-week, and that's a good thing. All right. So to continue, this is what we want to look at today. We've said that in the past, when Bitcoin gets below its 20-week moving average, it typically extends down to its 50-week moving average, which is what we've just seen. Okay. Now we want to see, how has Ethereum in the past reacted to this occurring, and what has it done during this episode? All right. So we'll quickly look at what has happened in the past with relation to USD. Okay, so this is the point at which Bitcoin fell below its 20-week moving average. Notice we're looking at Ethereum to the US dollar though. Bitcoin fell below its 20-week moving average and came down to its 50-week. So this is that period. And we're going to see what Ethereum did during that time. Okay, so from the week of 129, 2018, all the way to 521. All right. And the first thing that you'll notice is if we actually just look at the price range. So Ethereum was down as much as 70% in about 2 months. Okay, so it got down almost 70%. And from its high, it was down 72%. All right. Now, once Bitcoin hit its 50-week moving average, Ethereum had actually recovered some, but nonetheless, it was still down 50%. Now, you can compare that to what we've done during this cycle, and just to, sort of establish a baseline of what we're talking about here. Ethereum, from the time that Bitcoin came below its 20-week moving average, extending down to its 50-week, Ethereum is only down 8.7%. Okay, so, compared to what we saw in 2018, down 53%, right? And to its low, during that downfall, during that downtrend, that long-winded downtrend, Ethereum at its worst was down approximately 94%. Okay, so just a massive hemorrhage coming from 1350 all the way down to about $83. Okay, now we're looking at 2019 to 2020 basically. So in the first part of 2019, Ethereum goes on a nice run, going from $86 all the way up to about $300. Then Bitcoin falls below its 20-week moving average again, heading down to its 50-week. And yet again, what do we see? We see a massive dip with Ethereum, going down about 37%. Then if you want to just extend it out a bit further, obviously Ethereum makes actually a very nice run at the beginning of the year. So going from, again, this $130 level, and it goes all the way up to around 275. In fact, Ethereum, during that time, during basically the first and second months of 2020, it went on a better run than almost anything else did. Nonetheless, when COVID came, even from this point where Bitcoin originally got below its 20-week moving average, Ethereum was down 41%. And then in May, it got ugly for Ethereum especially. So Ethereum was down 52% during that time. Okay, so what we're saying here is we have numerous examples in the past of Ethereum getting hammered when Bitcoin falls below its 20-week. And we did not see that trend occur this time. Now, like we said before, this downturn is not necessarily over. Don't be fooled because we've had 3 decent days out of the last 4 where the market has, bumped off this 50-week moving average. You usually do get a small bump when you come down to these major price levels. We could very easily, within a week or two, Bitcoin could be below its 50-week moving average, and we could be on a serious downturn. Do not get fooled into FOMOing into the market right now, putting all your cash in just because there's been a nice bump, in particular with some of the altcoins. All right. We are above the 50-week, and that's all in good, but we need to see the trend continue. Don't be fooled into thinking this is over. With that said, in the past, we have not seen Ethereum in particular hold up so well when Bitcoin falls below its 20-week. We have seen negative 50%, negative 52%, negative 41%. This negative 41% that we saw right here was only negative 41 because we were already down. We were down 84% already to that point. So negative 41% was on top of the 84% that you had already lost. So we've seen these massive price losses when Bitcoin gets below its 20-week. And in this scenario, in this particular case, we have yet to see that. Okay. So from the time Bitcoin got below its 20-week down to its 50-week, we are down a mere, and where we're sitting right now, we're actually at 6.4%, but our worst weekly close was down 8.83%. Okay. So not the end of the world. And in fact, a absolute show of strength for Ethereum. Now, the next thing we should do is look at Ethereum with relation to Bitcoin. Okay. And I think this is going to be important if the market cycle is able to extend out into 2022. This is how Ethereum can get to the $10,000 level or higher. If you are someone that is bullish on Ethereum, if you believe that Ethereum 2.0 is going to introduce the scaling, the reduced gas fees, these sorts of things that the market is going to need to see out of Ethereum if it's to remain the gold standard of the altcoins. You're going to need to see these lofty expectations from Ethereum 2.0 sort of come to fruition. If they don't, I think there's quite a few competitors knocking on the door of Ethereum that can already do a lot of the things that Ethereum 2.0 wants to do. If Ethereum 2.0 is able to deliver on those, expectations, I think you're going to see this trend continue. If it falls short of those expectations, depending on the degree to which it falls short, it could turn very ugly for Ethereum in the long run. At the end of the day, we don't know exactly what's going to happen when Ethereum 2.0 comes out. So if you're looking for a channel that is going to definitively tell you they know what's going to happen, you're in the wrong place. So that's how we're going to approach this. And I think this is the most important chart to look at in that case. So what this says is basically we're looking at Ethereum to Bitcoin, and you can see that 0.082 is where we're at right now. We've discussed this level many times as being an important and critical level for Ethereum. The reason being, we have used this level as resistance for many weeks back in 2017, then again in 2018, then again in May. We got very close to it in August and early September of 2021. And then now we have finally got above this level and are currently trading right above it and using it as support. The reason I say this level is important is because if you are able to hold this level, this 0.082, then you can start to look at these higher resistance levels. Okay, so then we can start working on Ethereum moving up to a 0.10. And if you get above that, then you're looking at your prior all-time high of 0.15. What this means is getting above these levels essentially. For any given price of Bitcoin, Ethereum can hold, a higher valuation with respect to Bitcoin. So in the past, what we've seen is, during the setting of the bear market, like, just looking at when Bitcoin, for instance, drops below its 20-week moving average, that's when you see these massive drops. Okay. So this is when Bitcoin falls below its 20-week moving average. You see Ethereum go on a giant drop going from 0.1 all the way down to here at 0.5. It did recover for about a month or two, and then hitting resistance at the 50-week moving average, which is what Bitcoin did. Then Ethereum lost all support and just plummeted all the way down to a 0.017 level. Okay. Then, we've been working our way back up basically since the end of 2019. So now we're on this more long-winded uptrend. And you can see from 8/26/2019, now we're to where we're at now, finally breaking above this resistance level that we've seen Ethereum hit numerous times and are currently holding it as support. Now, you'll notice that if we just zoom in, we're right at this level at the moment. Okay, so we're right at this level and we're going to need to see ourselves hold it. Now, if we can do that, then like I said, we can go up to 0.1 and possibly up to 0.15. So we're seeing a position where you have your institutions, your hedge funds, starting to consider getting into the cryptocurrency asset class. They are going to want to know, why should I invest in Cardano, for instance? Cardano has, essentially nothing built on it right now. It's pure speculation whether Cardano will be able to, build the ecosystem around it that things like Ethereum have. So they aren't going to be getting into these highly speculative assets. With that said, that's not a shot at Cardano. I'm personally heavily invested in Cardano. I believe in the project long term, but I'm just speaking strictly from the way that your large institutions are going to be considering the asset class. They want to know, what are the on-chain metrics? How many people are using it? How many people are using these various apps? What are the use cases of the apps? What's the regulatory market like around the particular asset or the asset class or the niche of the asset, such as DeFi? They will be looking at, what is the likelihood that DeFi is regulated into the ground? What is the NFT market like? What is the longevity going forward of the NFT market? These are the ways you need to start thinking about this asset class. And, unfortunately, you don't hear many people talking about it. But at the end of the day, that's how this is going to be evaluated by the big money. But that is how you need to start thinking about this. And at the moment, Ethereum is knocking every other blockchain socks off in regards to the ecosystem around it, the number of people using it. There's nothing else even close, guys. So I understand there's scalability issues, there's gas fees. These are major hurdles for Ethereum. But at the end of the day, Ethereum is the premier blockchain in terms of number of users, number of apps, the general ecosystem around it. It has the most going for it at the moment. That could obviously change. Solana comes to mind as someone that's giving it a run for its money, but to this day, no one's beating Ethereum. All right. So I think that's why you're seeing this situation where Bitcoin is down more since it's fallen below its 20-week moving average. Then you're seeing Ethereum down, as well as then you're seeing many of the altcoins. They are holding up quite well in the setting of this market uncertainty that we're seeing. All right, guys. So this is what I'm watching going forward. And, like we've said, if Ethereum can start to move to these higher levels, which I do believe it can, if the general cryptocurrency asset class is able to hold up, which is all dependent on the larger market as a whole. If the market is able to hold up, then you can see Ethereum start to go to these higher levels. And I do suspect it will if the market cycle continues later into 2022. All right. So that's how this works. And this is why this is so important. If Ethereum can increase its value with relation to Bitcoin, then you can start to get to your higher valuations where you're seeing the relative value of Ethereum significantly rising with relation to Bitcoin. But a lot of things need to happen. It's contingent on a lot of things. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see ya.